Shall we start? Sure. All right. So guys, thank you for joining in on a Saturday morning. I'm Yash Tanna, research analyst at ithought.pms, and today we are going to discuss about the recent Bangladesh crisis and if that is a boon to the Indian textile, and if it is, then to which subsectors will it benefit the most, and what's the time frame like? Is it just I mean, we can benefit in the short run, or it will take time. So yeah, let's start off. So we must have read in the news about the recent crisis in Bangladesh, right? So on August 5th, the former Prime Minister Sheikh Hasina fled the country, and this ended her rule since almost 2009. Uh, Sorry, it's not visible. Anupriya Gopinath, can you just confirm if the presentation is moving forward? It's moving forward, right? Right. All right. Yeah. So, sorry for that. Yeah. So, this happened on August 5th, right, when the former prime minister fled the country, and this ended her rule. And this saw after this there were massive escalations. The inflation shot up in the country. There were protests, and there were all these macro challenges happening in Bangladesh. And we also saw some news snippets regarding Beximco Group, right? They are one of the bigger groups in Bangladesh. So there was a news stating that the Beximco Group is facing many challenges, and there are many textile factories that are getting shut, out of which so almost 170 textile factories that were getting shut, out of which 23 were owned by Beximco. So yeah, so yeah. So let's first have a look at the textiles value chain, right? Because I said that let's look at which subsectors will benefit. So first, let's understand which how the textile value chain looks like. So primarily for the cotton-based garments, right? We are a cotton-dominated country. So it's first cotton, then cotton is spun into yarn, where the spinners come into play. Then the yarn is either knitted or woven into fabric, and the fabric is then processed into the final ready-made garment that we wear, right? So this is broadly how the value chain is. Now let's look at the ready-made garments as a subsector, right? If you look at the global textile and apparel trade, it's almost $910 billion plus, right, as of 22. Now, out of this $900 billion, almost $540 billion plus is the ready-made garment market. So it is the biggest, subsegment in the textile and apparel trade. It's almost 60% of the market, and it's globally it's growing at around 3-4%. And now let's look how much Bangladesh contributes to this RMG exports, right? So, firstly, the biggest RMG consumers, the biggest RMG clients, importers are US and Europe, right? They almost have a combined market share of 50%. So, 50% imports are done by these two, which is US and Europe, right? And if you look at how much Bangladesh contributes to these, major importing nations, if we look at the charts below, so for the EU 27, Bangladesh almost contributes 21%, right? It's right after China, and it has grown from 19% to 21% in 24. If we look at the UK, again in UK it is about 15%, again the second biggest after China, and coming to the US again it is the third biggest after China and Vietnam, right? It's almost 9%, which has grown from 7%. And if you look at India, it's close to 5.7% across the board. The point I'm trying to make here is that Bangladesh is a significant contributor of RMG exports to the world. Now let's look at the significance of the ready-made garment industry to Bangladesh as a country. So here I've taken a very long-term data I've taken of total Bangladesh exports. So let's say, and I've just put the values for 23, right? 2023. So let's say Bangladesh exported 46 billion dollars worth of goods and services in 2023, out of which $38 billion was just ready-made garments. So 82% of the total exports, is ready-made garments. So the significance of ready-made garment industry to Bangladesh is massive. Yeah, and coming to that, it contributes around 12% to the GDP. Almost 80% of the export revenue is brought in by this ready-made garment industry for Bangladesh. As of 23, they exported $38 billion worth of ready-made garments, right? And if you look at a 40-year period, significantly longer time frame, if the total exports for Bangladesh has grown at 11%, while the RMG exports have grown at 19%. So yeah. And similarly, if you look at India's RMG exports, right, they have been stagnant. They have been very range bound. Let's say even from 2014 and 15, they have been ranging in the range of 13 to $15 billion. Now, what leads to this significant industry, right, of garmenting in Bangladesh? If you look at the cost side advantages, there are a few cost side advantages which makes Bangladesh cost structure significantly better than India, right? So first, coming to the duty, right? If you look at Bangladesh's duty, the chart on the left, the top left, if you look at the major nations, let's say EU, UK, and Canada, Bangladesh does not attract any sort of duty. Just a second. Just a second. Yeah, I'll do that. Yeah, I'm so sorry, guys. I just got to know that the slides haven't been moving, maybe due to some technical error, but I think now that's been resolved. So I think it was not moving from the second slide. So maybe I'll just restart from there. Yeah, so we are talking about the Bangladesh crisis, right? Uh, so in the Bangladesh crisis, we got a news about the Beximco group, right, which is one of the bigger groups there, and we got a news that many textile factories were being shut there, including 23 owned by Beximco itself. Now let's look at the textile value chain. So when I said that which subsectors will benefit from the Bangladesh crisis, we should also look at the value chain to get a better understanding of that. So yeah. First, it's the raw material is the cotton. The cotton is spun into yarn. The yarn is then knitted or woven into fabric, right? And then it is processed into the final ready-made garment that we wear. Now let's look at the overview of ready-made garments industry as a whole, right? So if you look at the global textile and apparel trade as a whole, it's $910 billion as of 22, and almost $540 billion plus, which is almost 60% of the market is apparel, right? And which is then again followed by fabric, yarn, fiber, and then home textiles is a small part of it. So almost 60% of the textile and apparel trade, apparel forms the majority portion of it. Now, looking at the contribution of Bangladesh, to ready-made garment exports. So, firstly, the biggest consuming nations are EU and US, right? They almost have close to a 50% market share, if we combine these two. So, if you look at the charts on the bottom, to EU 27, Bangladesh exports, right, almost 21% of the exports are from Bangladesh. To UK, it's about 15%, and to US, it's about 9%. So it's the third biggest after China and Vietnam. So Bangladesh is a very significant contributor to ready-made garment exports, and China and Vietnam are the other two big ones. Now let's look at ready-made garment industry's significance to Bangladesh as a country, right? Here's a very long-term data of Bangladesh total exports and exports of RMG, right? So in 2023, if Bangladesh exported a total of $46 billion worth of goods and services, RMG exports were $38 billion, which is almost 82% of the exports, right? So it's very significant a contributor to the economy. Yeah, so again, it's about 12% to the GDP, right? It contributes about 80% of the export revenues, which is very big. They exported almost $38 billion worth of RMG in 2023. And if you look over a 40-year period, right, the combined exports have grown at 11%, while the ready-made garment exports have grown at a 19% CAGR. So they have outpaced the export growth. Now, if you look at India, right, India exports of RMG have remained stagnant, right, almost from 2014-15 onwards. They've been in the range of 13 to $15 billion since a very long period. Now, what gives Bangladesh, this massive scale in the RMG industry? Let's look at some cost side advantages. Firstly, coming to the duty, right, the top left chart. If we look at the major, consuming nations like EU, UK, right, these two, Bangladesh attracts 0% duty, and even in Canada, it attracts 0% duty. Whereas if we compare it to India, India attracts 12% duty in EU, UK, and in Canada it attracts 18%. To the US, it's fairly constant. But in the EU, majorly, Bangladesh has a duty advantage, EU and UK, right? Which are big consuming markets. Secondly, I think if you look at the other cost structures, garmenting is a very labor intensive, by nature, right? And if you look at Bangladesh's cost of labor, it's around $140 per month, right? And if you compare it to India, it's close to $180. Similarly, cost of electricity for Bangladesh is also, probably on the lower side or at par. If we compare it to India. So these are some structural cost advantages for Bangladesh, which makes its cost structure much better compared to Indian manufacturers. However, if we look at the textile integration, Bangladesh does not have a backward integration for textiles, right? It has to import the raw material. Whereas India has a very strong cotton ecosystem, right? We are a cotton producing nation, uh, uh, and we discussed this in the last textile webinar. So I mean, India has a very good textile integration, and therefore the lead times probably are slightly lower for India. Now, this is a statement from a leading textile player in a conference call that he mentioned. So after the Bangladesh issue popped up, and there were questions regarding that. So he said that the cost structure of Bangladesh will not allow Indian producers to compete on a longer term basis. India currently does not have the the kind of size and scale to cater to the requirements of customers that Bangladesh is catering to. So there's a massive size and scale in Bangladesh which currently India does not have, right? And it's very difficult to build that in a very short period of time. So what is government doing, to bring that to India, right? Government has very ambitious targets for textile exports reaching almost $50 billion, right? So what is government doing there? So there are various schemes that the government has introduced, like the PM Mitra, PLI, ATUFS, to make India more competitive by creating economies of scale. So the PM Mitra parks are basically huge infrastructure created by the government, and then the governmenters can just use sort of a plug and play model, right? Where they can use the economies of scale, basically. And then there are a couple of duty drawback schemes and ROTTEP that is given. And in addition to that, India is also seeking FTAs with UK. We must be hearing from a long time, but FTAs with UK and eventually with EU, right, which will allow India duty free access. We saw that Bangladesh has duty free access to UK and EU. So, looking at the Bangladesh's top 10 garment exporters, right? If we just look at, this is their 23, 24, like the recent years exports, RMG exports, and these are the top 10 exporters. So, if we, total that up, top 10 exporters, they are exporting almost $4.6 billion worth of garments, only the top 10, right? And this is almost one third of India's RMG exports. If you look at India's biggest listed garment player, they have about 350 million dollars worth of exports. And India has very few large scale garment manufacturers. So you can, count it on your fingers that there are very few large scale garment manufacturers in India. And whereas in Bangladesh, only the top 10 are equal to one third of India's total RMG exports. Now, let's come to the second subsector, which is home textiles. So, if you look at the global home textile market, it's close to $57 billion, right? Significantly smaller than apparels, right? 1/10 almost. And out of which India is exporting around $6 to $7 billion worth of home textile products. Again, here US is one of the biggest markets, right, for home textile imports. Almost $4.5 billion plus worth of home textile imports by US, and it is then followed by Europe and UK. And this structure is very similar to RMG. So consumption is very similar to what ready-made garments is, right? Uh, but Bangladesh here, wherein RMG Bangladesh was a big player, right? Bangladesh here is a very small player in home textiles. The bigger players are India, China, and Pakistan in the home textiles market. So let's look at country by country. If you look at share of imports, for the US, if you look at for cotton sheets, pillowcases, bedspreads, right? For US, basically home textile products, India is a dominant player. It almost has a 40% share, right? Followed by China at 22, and it's on a declining trend. So if we in 2017, China was at 30%, 30%. It's come down to 22%. And Pakistan is on an increasing trend. It has come up from 18% to 22%, and India is fairly stable. Similarly, looking at your EU, right? So for EU, Pakistan dominates, the EU market. There's a 50% share that Pakistan commands, and it is, increasing over time. Followed by Turkey, which is the second biggest, and then India comes at 10%. Similarly, looking at the UK, again, which is a big market, China dominates here with a 22% share, followed by Turkey and Pakistan. So here, Bangladesh, the point being that in these three big markets, Bangladesh is not a very big contributor, right, to home textiles. And if you look at, across the board, bedspreads, terry towels, or sheets, India has been gaining share, right? This is US data, and this is data that Aquarius publishes. So Otexa data, which Aquarius gives out. So this from there. And if you look at across the board, just look at India, right? The orange box. In 2018, in bedspreads, India had 15% share, which has gone up to, if we look at the last box, it has gone up to 24%, 24 Jan to October period, right? Similarly, for terry towels, have gone up from 39 to 43. right? And for sheets, again, we have closed at 61%. So India is gaining share across the board when it comes to home textiles in US. And this is from a very recent, very recent management meeting, uh, right? This is a comment from a very, one of India's biggest home textiles player. When he was asked what benefits home textiles will have due to this Bangladesh effect, so he said maybe due to the Bangladesh effect, yarn and fabric prices might come down a bit because, right, Bangladesh is a major consumer of yarn, right? So that supply does not go to Bangladesh. Where does it go? It comes back to India, right? So maybe those prices can come down a bit, and that can be a benefit on the raw material side. But other than that, they don't expect any significant benefit because we just saw that Bangladesh is not a very big contributor to home textiles. Now let's look at the third subsector, which is spinners. Basically, what's happening in spinning. Let's look at the landscape, right? So Bangladesh is dependent on India and China for the raw material, which is cotton. If we look at the domestic production of cotton, the countries which are self-sufficient in cotton, probably there are two major ones, which is India and China. China has 75% domestic production. India has 94% domestic production, right? And Turkey also has 45% domestic production. Uh, but so India and China are self-sufficient when it comes to raw material. Bangladesh depends on India and China for its yarn requirements. So if you see Bangladesh, almost 25% is from India, almost 38% is from China, right? So it's dependent for raw material. And if you look at the spindle capacity, right, this might be slightly, an older data, but if you look at the spindle capacity, uh, China is almost 23 times more spindle capacity than Bangladesh, right? And India is also almost 10 times more spindle capacity than Bangladesh. So Bangladesh does not have spindle capacity, which is basically raw material and yarn capacity. Now, what's happening in the spinning industry, right? There are a couple of things that are happening in the spinning industry, which and the spinners are not really doing well. So, a few reasons, right? Domestic cotton prices have gone higher. They are trending higher than the international cotton prices, and this arbitrage is more than the historical arbitrage. And hence, the spinners, right, they are becoming uncompetitive in the global markets because your raw materials is more expensive than the others. The government has imposed a custom duty of 11%, right, for importing of cotton, and this does not allow the Indian spinners to import cotton. So that's a challenge. And again, because there is a subdued demand across the board since the last 1.5 year, the spreads, which is the cotton yarn spreads, they are weak and they are impacting the margins. So what has happened due to the reasons that we just discussed, right? This is the this P&L and operating profit of a good spinner, right? When I say a good spinner, it sells yarn at a premium prices than the others. It has a premium yarn quality. So margins for a good spinner are at decadal low. So it was trending anywhere between 20-22%, right? 19 to 22% over the whole decade. Now it has come down to 13-14% in the last 2 years, right? So there have been a significant dip in the margins, operating margins for spinner, right? So what is the challenge due to cotton pricing, right? Now, as Indian cotton, as we discussed, right, it is at a 15% premium to international cotton, right, which is above historical averages. The spinners are facing a challenge, right? And here is a snippet from what a leading spinner is talking about, right? So he's saying at the moment the cotton prices are near the MSP. MSP levels are determined by the government, right? Below which the cotton cannot be sold. So he's saying maybe at 52,000, 53,000 a candy, the MSP will hit and they cannot go below that. And whereas if you look at the international cotton, there's a lot of availability, and hence they don't see a lot of upside on the international cotton prices. So Indian cotton is at a 15% premium to New York futures, which used to be approximately 5% earlier. So this difference seems to persist for a while since they don't see the international cotton going up and the Indian cotton going down by a lot due to the MSP. Here's a chart of domestic versus international cotton. So if we look at the recent years, Indian cotton has trended above the US cotton, and the difference probably has widened a bit. If we see from April or June 24, it has widened a bit. Again, if you see the around Feb 22 and June 22 levels, the difference again was very high. And this time again, if you look at the margins of the spinners in those quarters, they had been impacted by a lot. And this is the cotton yarn spreads, right? Which is trending almost, they are not on the upward trajectory, but they are just near the average prices. So what is needed for margin improvement? This is again from one of the biggest spinners in the country, right? He's saying that there are two things that are needed for margin improvement. One is either the New York futures goes up, right? So our cotton cost is comparable to the global market, and the spreads can increase thereafter. And the second is if the government removes the duty, the 11% duty that we spoke about, then the spinners can, procure cotton and import cotton at a lower price, and that can bring some parity. So if these two things don't happen, there doesn't seem to be a reason where the margins would improve for spinners, is what he's saying here. Final thoughts. So I think the sub-segment to benefit the most out of this crisis, right, is the RMG manufacturers, which is the ready-made garment manufacturers. However, India lacks scale and the cost structure which Bangladesh has, and India will have to benefit. India will have to build that over a period of time. The bigger players like the Shahis of the world, KPR, Gokuldas, these players, the bigger players will be much better placed to get a incremental share of demand, right? Where the retailers are looking to source more from India. So the bigger players will be much better placed. As far as home textile is concerned, Bangladesh isn't a big player, and hence no major benefit is expected. And again, as far as spinning is concerned, Bangladesh is a key client rather than anything else. And hence, in the near term, if the Bangladesh crisis worsens, right, there'll be additional supply of the raw material in the country, and maybe that can be a negative as well. So again, this is a comments from a large RMG player in the country. Uh, so what he's saying is Bangladesh needs the garment industry very badly. So as we saw the significance of the RMG industry for Bangladesh, right? Uh, it's for their economic survival, he's saying. And as of now, he's saying there's no capacity outage in Bangladesh. Things have turned back to normal. Uh, what he's saying is there's a lot of customers are lacking confidence in Bangladesh now, and they're saying that we do not want incremental growth in Bangladesh anymore. So it's more of diversification out of Bangladesh into India for the incremental demand, right? And he's saying that so much so that the European players are willing to forego the duty arbitrage that we saw, that Bangladesh has a duty arbitrage and India doesn't. So they are also, ready to forego that arbitrage and pay a little extra, but diversify the incremental demand to India. So again, now this is a short-term performance of the various stocks of the subsectors that are in. I just took a short-term performance because I wanted to show you, from the time that the news has started coming in and the disruptions have started happening. Initially, if you see around August, everything went up, right? And again around December when the Beximco news came out, again everything went up. So the home textile players went up, the spinners went up, the garmenters went up. But eventually, if we see, last 6 months, what has been a steady state now, we can see that the RMG players, just Gokuldas and KPR, have held whatever gains they had, right? Whereas the spinners and the home textile players have sort of not kept up pace with that. Yeah, so these are the sources that I've used for the presentation. Yeah, coming to our True Blue, right, the large cap fund that we have, uh, the ithought way, right? What is the investment philosophy? So we have a long term focus, right? Non consensus investing, right? We have a bottom up approach. There's a high focus on risk management. So in the True Blue portfolio, what are we trying to capture, right? We are trying to capture the India growth story, right? Along with the global champions, right? Which will emerge out of the export story. So we're trying to capture both in the True Blue portfolio. What is the USP of True Blue? So it's 100%, pure large cap concentrated portfolio. There's a high active share. There's a low churn. It's more of a buy and hold strategy, and there's zero fixed fees. Yeah. So, what is a great investment for us? Good corporate governance, strong leadership, Uh, Probably industry leaders is what we look at. High return on capital employed, and zero or low leverage, right? And finally, I think final and the most important is reasonable valuations. So as I said, it's a completely large cap portfolio, so 25 large cap stocks, no small and mid cap. Yeah, this is an interesting slide which I want to present, is about the drawdown, right? When there's periods of stress or periods of drawdown, True Blue has behaved exceptionally well, right? If you look at Nifty 50, this is in June 17, June 22. Nifty was down by 17% from the top, right? True Blue was down 12%, and this is the performance of other comparable funds. So True Blue behaved significantly better than the others and the Nifty. This is again from 28 March 23, right? So Nifty was down by 10%, True Blue was down by 5%, just half of that, and subsequent performance of other funds. So what should our endeavor be, right? What should we expect, right? We should expect 200 to 300 basis points outperformance versus the benchmark, right? And the time frame that we should be looking at is a 3-year rolling time frame, right? Yeah, so this is the fact sheet. I think just have a look at this. Yeah. So investment team, I think Mr. Sham Shekhar, fund manager and founder, Mr. GR Balaji, head of research, and along with them, we also have a wide team of analysts and strategists. Yeah, this is the performance sheet. Yeah, this is the key terms. Yeah, happy investing. Yeah. I think I'm done. Maybe we can, take any questions, Gopinath. I don't know. You can type it on the chat box and we can take the questions. I'm sorry if the slides were too fast. If there's anything that you would want me to repeat, I will pick it up. Let's say that mostly overvalued now. Uh, Sorry. Uh, yeah, so Adik, I think yeah, there will be times, and it's probably moves in cycles as small caps outperform and then probably stagnate or dip for a bit and then large caps outperform. Uh, I will have to pull out the data, and maybe I'll pull that out and share it with my team, who can share it with you on the exact time frames. Sure. India's performance chart slide 10. Are you referring to the India's ready-made garment exports, sir? I think I'll pull that out. Was it this one? Yeah. Yeah. So what I'm trying to basically, what I was trying to say here, that while Bangladesh RMG exports have grown significantly, if we look at India's exports from 2014, I mean, it has been somewhat stagnant. It has been in the range of 13 to 15 billion dollars from 14 15 is what I was trying to mention here. Yeah, sure. Yeah. Thank you. Cotton slide. I'll just keep the presentation. Sure. Sure. Are you referring to this one, man? Uh, the cotton slide, right? With the reasons what's happening in the spinning industry. Yeah, so the question about how New York cotton futures increase will help, right? So currently, the Indian cotton is significantly more expensive than the US cotton, much more than what it was at historical levels, right? So, and in the RMG market or in the finished goods market, you compete, with everyone. You compete with China, you compete with Vietnam, you compete with all the players, right? So, if your raw material is more expensive than the others, because India raw material come from India, and basically the US New York future, determines the world cotton prices, right? So then, if your Indian cotton is more expensive, then obviously you will be at a disadvantage. So if New York futures also moves up, basically global cotton prices also go up, then you come at par. I hope I answered that. Sure. I'm so sorry for that. Yeah, this slide, right? Two blue side of the share fund managers. Yeah. Nisha, is this slide only that you're referring to, or the team slide? Thanks a lot. Thanks. This is the fund managers, and this is the investment team. Yeah, thanks. Yeah, any more questions? I am not able to see anything. Yeah. So in RMG, the bigger players, so Shahi is one, which is unlisted. One of the biggest players. KPR is Gokul Das. Pearl Global is one. Arvind is one, which is into denims, and RMG otherwise as well. So these are a few big players in India. Yeah. And most of these players are actually adding capacity. If we look at across the board, I discussed this in the previous textile webinar that most of these Indian players are adding a significant capacity compared to their current capacity. Thanks. What do you mean by fund investing detail page? Okay, was it this page only, right? What we look at when we invest. Yeah, so not the excess yarn capacity from Bangladesh. I mean, India already has yarn capacity. Bangladesh does not have a lot of yarn capacity, but Bangladesh is a key client for yarn, right? So if there is further disruption in Bangladesh, and if a key client cannot import more because he does cannot export more goods, so that excess yarn or fabric can, rather than going to Bangladesh, come back into the country, or just stay into the country, and that excess capacity of yarn can probably help the RMG or the home textile who consume that raw material in the near term. Yes, and if that happens, if incremental challenges happen, and if they cannot export more to Bangladesh, that can be a possibility. I think, Ms. Nisha, anything related to the fund, if you have any, further queries, you can definitely contact my team. Uh, right? I'm putting it out here, and they will help you out with anything related to the fund details or anything of that sort. Any more questions? Yeah, thanks. Yeah, Gopinath, I think we can close it down if there are no further questions. Yeah, sure. So thanks again, everyone, for joining in, and I hope I was able to add some value. And I'm sorry, again, sorry if the slides were a little bit faster. I'll keep it a little slower next time. Thanks again. Bye, guys.